Good morning everybody, and this is your S&P 500 day trade setups for today. So we did get CPI data coming out, which was better than expected, had a really strong rally and then immediately pulled back. So this tail, which is roughly 980 points on the 8-hour bar, and if you look at it on the daily, it is 1,100, almost 1,200 point tail. This is just absolute chaos. I think what we need to do here is pay attention to the pattern that is forming. So you either look at it that way, which is kind of a flag, or you're looking at it, which is more or less the way I'd be looking at this right now. It is a megaphone formation, which is a consolidation pattern. Can break either way. We do have the crossover, as we spoke about yesterday. We've got crossover of the oscillators here. We've got diversions on the oscillators. So everything here is signaling a move to the upside. And then the last major time frame we need to pay attention to is the weekly. So that is a rejection, or an attempt at a rejection, of the weekly trend line. So there's still a lot of bears out there that think we are going to plunge, and that is why this is happening. And we still got the Fed's coming out today with information on the interest rate hike. So quite simply, if an interest rate hikes back at 0.75% or higher, we're going to sort of find a base lower down. And if it comes in at 0.05 or even less, then you can expect this to continue. So this is just really knee-jerk reaction to news, positive news flying, and then the perma bears that are still in the market forcing it down from a bit of structure. So right now I would also be putting in that level there. That is fairly important. In fact, you can raise it to that high there, because that is where the rejection is. So that's a structure. Big up, big down, big confusion. Don't always want to be involved in that. And then we've got a crossover of the moving averages, and we're above the 155. So I would be waiting for data. I don't think there's no signals here that you need to get in on this just yet. That's a big up, big down in one day. And we've still got a bit of a gap from where the actual market sort of closed, or where they closed on Tuesday. So that would have been down here in this area here. This is pre-market stuff. This is during the market. So a little bit of a close, and that's yeah, it's going to be a red pin bar on the normal market, specifically on the daily. So that could really be a bearish setup off structure. So you need to pay attention to the lows of yesterday. There are two lows. This is the first one, 39.91, and then the second low you need to pay attention to is this sort of pullback here where the buyers came in at 4,039.99. So is it a test of 4,000? We don't know. But as I've been saying for quite some time, this 4,000 level is critical to pay attention to. So just keep your wits about you and watch that level closely. So if we get down to 15 minutes, you'll see there was no way you could have got in on the move to the upside. Massive gap up to the upside, big range, and then immediately selling off. So the only thing that you could have bargained on was a rejection of this trend line here. But you can see how volatile that was. That would have been 735 point volatility, almost 2% move that it was moving around. So can't trade that kind of stuff. That's why we don't like trading data. And you've got more data coming today. So my advice is really wait for the data today. Get your levels in. This 4,000 zone here is obviously structure. So that's between 4,000 and 3,991. So you've got almost a 10-point zone here. If we hold that and we stay above these moving averages, expect another visit to the high of yesterday if the news is good this afternoon. If the news is bad, flag, move down, probably come test the lower side of this megaphone formation. So that's kind of where I think we're going to be trapped for the rest of this week, is between 3900 and I think this is 4150 area. That's kind of the bigger megaphone range that we are finding ourselves in at the moment. So, fortunately, is no setups for you, but sit on hands is always a good trade, and wait for the noise to sort itself out, wait for the algorithms to sort themselves out. If we stay above 4,000, just remember we've got a weekly options closeout tomorrow, and what I've seen, most of that's at 4,000, and it's not tomorrow, sorry, it's Friday. And then the other thing is that the monthly closeout's on Friday as well, and all those options, the open interest is sitting at 4,000. So I suspect this is kind of the area we're going to close the week in, either just above 4,000 or just below 4,000. So bulls wanting above, bears wanting below. So that's kind of what I'm expecting. You're probably going to see another big up and big down day with data today before we can actually start getting some kind of trading in. But do pay attention to the Forex videos this morning, because I've saw some things in the Forex market that could be a bit interesting, probably going to be easier to trade than what we're seeing in the S&P 500. Anyway, that's kind of my view today. I'm sitting quite still. I'm not even bothering to look for structure on this. We'll wait for the next lot of noise to come out before we make a decision. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.